If you're getting ready to purchase your second home, or you've been thinking about purchasing a second home in Central Oklahoma, this episode is for you. I'm here with Aimee Dauphin of Stride Mortgage, who's going to answer the most common questions we get about buying a second home, or maybe buying an investment property, or if you've got your eye on an investment home, like maybe a lakefront house that you want to spend there with your family during the summertime and not quite sure how that funding works, this is the episode for you. I'm going to be asking Aimee a little bit of questions. And before we get into that, Aimee, tell us a little bit about yourself, your history here in Oklahoma, and how you came into the mortgage industry and how long you've been in it.
Okay, well, like you said, I'm Aimee Dauphin. I am Oklahoma born and bred, and so is my family. My husband and I have been married for 29 years in May, so been a long time.
Yes.
We have 2 children. Blake is 27 and Bryce is 20. Our oldest is married, and we are expecting our first grandchild in May.
Hey.
Yeah, we're really excited about it. I've been in lending since 1998. Wow. Prior to lending, I was actually a real estate agent.
Excellent. Long time in real estate.
Long time, yes.
Yeah.
I've seen all the ups and downs, I feel like.
It's amazing. So roughly 25 years in lending, then.
That's correct, yes.
It's amazing. You've seen a lot.
We have.
You went through the recession. You've gone through the
crash.
The crash. Wow. What an incredible. So wealth of knowledge, wealth of information. I think I heard that you did $80 million in loans last year. Is that right?
Yes. My team and I did $80 million in loans last year.
That's massive, especially for this market. Some of you may be in Southern California. Some of you may be in New York City. You say that's not a lot.
Yeah.
When your median market price is around $250, that's a huge number that their team has hit. They're able to do huge volume. And I think you're going to find out that they actually have quality service all along the way, even at that volume. So she's got some great help here. We're going to show them in a little bit coming from their family. So let's get to these questions here. What are the general qualification requirements for someone seeking to purchase a second home or an income property?
That is such a great question, because actually it's super simple. For a second home, you only have to occupy that property for a portion of the year. So it's not like you have to be in there 6 or 9 months, or your intention is to permanently live there as a second home. Just being there part of the year, and the time that you're not there, you can actually capitalize on Airbnb, or maybe you want to VRBO it for some income.
Excellent. So no super big pressure there. It's really pretty flexible. Are there any differences when we talk about the escrow requirements for a second home when compared to an owner occupied property?
No, there's not any escrow differences, even on our investment properties. Mm-hmm. Anytime a consumer puts 20% down, they can waive their property taxes and insurance from their mortgage payment, or they can escrow them and have them paid monthly with their mortgage payment on all 3 types of financing.
And this this just hit me now on question number 1. Somebody may say, well, I had more questions on the general requirements. When we talk about things like maybe credit score, is it still the same? If they got a primary occupant home loan, there's a good chance that they're still going to qualify for a second home. Is it about the same process?
Yes, that process is really the same, honestly. We're going to look more heavily on maybe their debt-to-income ratio. Okay. And the fabulous thing about the age today is that we have everything's electronic. So Once we run it through our underwriting system, if we get it approved and we've got all the right data in there, we very rarely have any issues after that as far as qualifying goes.
Gotcha. So yeah, some of you may have heard before, you get pre-qualified and then maybe you don't later. So that's a great news. So in other words, if you are a strong borrower on your primary occupant, you're going to have no problem getting that second one. So if you're thinking about it, now's the time to pull the trigger on that. You won't have to worry on the lending portion. Aimee's going to run you through the cost differences, the debt to income differences that are required, and that'll just happen in a short phone call. And then as well as, some of the down payment requirements, like you've got to have 20% down typically. You talked to me a little bit earlier that you have a special program here where you can do just as little as 15% down.
On an investment property, that's correct.
Yeah, so if you want to pick up that extra rental property this year, you see some deal, they've got a program, and you just say, well, gosh, I don't really want to put 20% down, or maybe there's some renovations that you need to do, and you go, gosh, on the back end, I just really can't put 20% down and be able to renovate that kitchen. She might be able to help you out with reducing that 20% back to that 15%. There are some other costs as the mortgage insurance and stuff on that, but the option is there is the point. Most lenders, you're not going to find that option. So that's wonderful news. Does the bank still allow me to choose my insurance company?
Absolutely. We want you to do business who you're comfortable with, as long as the loan is insured, or the premium, not the premium, but the the proper loan. Sorry.
It's a loan covered by insurance.
Exactly.
The bank's got to get repaid. But I think the important question that maybe that person had was that, is it as simple as my primary home payment where,
yes,
the taxes are already in that payment, the insurance is already in that payment, and you do have the choice, right? You can have it where you handle your own taxes, you handle your own insurance payment, or you can have them take care of it for you. I don't think there's any additional cost to have it escrowed, is there?
No, there might be a little bit hidden pricing. Sometimes investors will have that, but we talk about that up front. It's super minimal. And as long as you have 20% down, you have that choice.
When you're managing multiple properties, some of you maybe you're on your third or fourth, fifth, keeping track of all that taxes and insurance is a nightmare. It can be. Just let that payment, all one payment. You get one payment pulled out of your account, you're good to go. Okay, so the next question that we get a lot is, how can I use rental income earned off the property to purchase more homes using a mortgage?
That is such a great question. There's a couple of different ways we can do this. So, for example, if we have a little bit of a debt-to-income ratio issue right now with the property we're wanting to purchase, we can actually have the appraiser do what we call a rent schedule on the new home that we're purchasing, and they'll give us what the fair rent price is, and we use 75% of that to offset the new debt.
Wow. Folks, did you hear that? You don't even have to rent the property out yet. If you find a deal, let's say, of course, you're working with me. Let's say you're working with
and
me.
With me.
And with Aimee, riding a Dauphin. No, I'm just kidding. Last name is Dauphin. It's spelled different. I have a little joke going with her now on the Dauphin thing. But so you found the property and it's not rented out yet. But we clearly can see through Zillow or some other sources that it's going to rent for this amount. We know that. We've seen it. There's a lot of data pointing that direction. There's an excellent chance that we can get an appraiser to see that value too. They're then able to, before it's even rented, before a lease is even in place, they can use up to 75% towards your current purchase of that home to help offset your debt. So if your debt to income ratio is a little tight, and debt to income would be the bills that you owe each and every month, those are reoccurring payments, right? If that becomes tight, and it can, don't feel bad if it's getting tight, especially when you're growing your portfolio in these early parts of the years. Your wealth, you're positioning yourself for wealth growth. You may not have gotten there yet, so it can get tight because we're leaning on that leverage, right? And we talk about that in other videos, why that's a good thing, right? Why you want the bank to hold most of their risk in this scenario. So being able to use that is an incredible resource. And the good thing is Aimee's smart enough to know if you don't need it, she's not going to knee-jerk order that because that's a more expensive appraisal. She's going to be looking at it for your best interest to try to get those bottom line as low as she can. So if you don't need it, they're not going to do it.
Nope.
But if you do need it, she's got that resource and she's going to be able to plug that in. So that's great to hear. Now, if somebody's already got a property and they want to be able to use that income, can you still do that on the property that they own already and help offset that?
Yes, absolutely. We can do that. If they don't have a filed tax return yet because they just acquired it in the last 12 months, then we can use the lease agreement and we'll use that to offset that payment as well.
Can you use 100% of the lease agreement at that point?
You cannot. It's 75%.
Okay, what if after a year they've got a tenant that's been there a year longer and now they've been reporting that income? Can you use that?
I can use from the tax returns. So whatever they're reporting on the tax returns, we have a calculation that we use from their Schedule E.
Excellent.
Yes.
Now, this is a bonus question here. How many of those can one person do? On a 30-year fixed rate loan, how many on average can you do for one person?
For the secondary market, it's 10.
10
properties.
Now, is that one per, like if you're a married couple,
yes,
he can do 10? If she has the income, she can do 10? Or are we 10 for both?
Well, that's a great question.
Okay.
So it is...
I love great questions. I got her stumped.
You got me a little stumped, making me think.
Yes.
So yeah, if you're not applying for joint credit as a married couple, and I as an individual want to go and purchase 10 properties, I can do that.
Okay.
And then my husband could go and purchase 10 properties. I don't think there'd be anything wrong with that.
So if you're a power couple and he's got a great job, you've got a great job, we're seeing more of that going on.
We are. Your
family could get 20 homes on a 30-year fixed rate before we even have to talk about commercial loan products. That's 20, if you do duplexes, that could be 40 doors just with regular mortgages you already know and trust on a fixed interest rate, not going anywhere. And then, of course, if you want to refinance later, pulling some of that equity out and buy even more, you can do that as well. So that's pretty exciting.
It is exciting.
It's pretty exciting. All right. So the last one here is basically just a catch-all, right? Is there any major differences between a primary occupant home loan and a second or investment property home loan that we haven't talked about yet that you think is important?
Well, I do want to just touch a little bit on the second home. Because as I mentioned previously, you can rent that out part of the year because you're going to occupy part of the year as well. So if you're VRBOing it, if you have it for 2 years, then you can start using that as income. So you do have to have a 2-year filed tax return on the second home. Correct.
And that's called short-term rental. How is that being reported? It's called short-term rental?
It's short-term rental.
Okay, and that's the Fannie Mae or whoever the guidelines is saying short-term rental. Is that the key word there?
Yes.
Because I know we always use Airbnb or VRBO, but the official term is...
Right, you don't have a lease agreement because you're short-term renting it out. But those programs like VRBO and Airbnb, they have a great system that tracks the income. You can track your expenses.
Easy.
You can, your cleaning fees.
And then they just print that off
at the end of the year. That's right. Yeah, they can do. Well, it needs to be on their tax returns.
Okay.
Now they can print it out
on your tax returns
for their CPA.
They got to get their money.
But yes, it does need to be on the tax returns if it's a second home and they want to use that as income.
Okay. Well, we want to treasure their time. Is there, we've talked a little bit about your team and how different you guys are doing things over here, but maybe brag a little bit more on your team here. I mean, a lot of lenders, they're in the industry for maybe a short period of time and they're kind of getting up and started. You've got a good footing on this industry. You got a good footing on understanding, and your staff does too. Yeah. Talk a little bit about you guys. What's the difference here?
Oh, I'm super proud. So, it's kind of like bragging on your kids. Here at Stride.
Which one of them is, right?
Yeah, actually, yes.
And then they have a dog. They have a mascot dog.
We have Fannie Mae. She's our Labradoodle, and she's our office dog. But on a more serious note, we are here at Stride Mortgage and the Dauphin Mortgage team. We are family, and so we treat you like family. We welcome you in. My daughter-in-law is a loan officer on the team, Sarah Dauphin. My husband is over business development. And I have 2 loan partners, Chrissy Wood and Danielle Robinson. She's been with me for actually 8 years. And we have Abby, who is our admin. So we have a strong team. We love on our people. We've got a lot of repeat clients that come back to us because, again, we're family and we treat you like family.
For more information or to get started with your home, visit OklahomaRealEstateShow.com.